It has indeed, Nancy. Yesterday I was talking about globalization 4.0 and the future of the world and what governments are going to look like. And Steve was right here in Abu Dhabi.
Yeah, you were down in Dubai talking about the 21st century. I was looking at a very 20th century product which is trying to elongate its life in the 21st century. And at the moment, of course, there is a huge amount of soul searching at OPEC. And I want to just really tell viewers how I see it, because I think something's gone badly wrong for the organisation and its allies between a meeting I was at in Algiers in late September to now. We have gone into, all right, we're back up again today, but bear market territory from early October to early November. So what went wrong? Because when I was in Algiers, the ministers and the UAE and the Russians and, of course, the Saudis were talking about they can provide a lot more oil to the market because there is going to be a real demand surge and a supply problem. Now you can flip that completely on its head, and we have this extreme volatility coming into the market. So I managed to catch up with all of these key players yesterday, and we started off by asking the Russian energy minister, Alexander Novak, where has all this new volatility come from, sir? Are we pointing the finger at producers, or are you pointing the finger at the United States? Let's listen in.
I think that there are a lot of factors affecting the changes that we are currently seeing on the market. From the point of view of stability, we have previously said that one of the most important factors are these sanctions that might be brought against Iran. I can tell you that a month ago, the mood in the market was that there would be a lack of supply, and everyone was talking about who would be making up for this shortfall. There only had to be softer sanctions taken, again as a result of political factors. And we are now seeing a mood of surplus in the market. There is a lot of volatility in the market. And what's more, this volatility could remain. Therefore, right now, we shouldn't be making any hasty decisions. We need to look at the situation very carefully to see how it will develop, so that we don't end up changing our course by 180 degrees every month.
That was Alexander Novak talking to me, and we've got a lot more sound from him, so we can listen to that a little bit later on as well, including him being a little bit vague on whether they would be taking oil off the table, because, of course, the Russians are at a post-Soviet high on their production now. They're up to 11.4 million barrels a day, which is topped only by one other nation, and it ain't an OPEC nation as well. It's the Americans who are producing, according to the EIA, around about 11.6 million barrels a day. So let's just listen also to what the other major player in world oil, the Saudis, had to say. And the Saudi energy minister yesterday, well, was a little bit vague on what they'd be taking off the table, despite, of course, the reports that nominations for December were down 500,000 barrels. But let's listen in to Khalid Al-Fali.
Well, we're not talking about taking anything off the table. What we're talking about is looking at the market fundamentals and making sure we understand what is the long-term trend. We're not in the business of responding to weekly and monthly gyrations of the market. Sometimes they're driven by fundamentals, and sometimes those fundamentals are long-term and they require action. Sometimes they're driven by sentiments and by short-term events that we have to wait for them to pass and then assess what action is required. The other thing I would remind is that this is a joint ministerial monitoring committee. It is not a decision-making body. We are not in the business of deciding what the 25 countries will do, but we are able to assess and listen to technical presentations about the long-term trends, and based on it we can make recommendations.
There you can hear the two top players talking to CNBC yesterday. So I think they are just a little bit bemused. They're a little bit shocked at what's happened as well, and a little bit uncertain how to go forward.
Well, Steve, this is the question, isn't it? They thought they were sitting pretty ahead of these Iran sanctions. Do they feel screwed by the United States?
I think you've asked a very blunt question, and you've asked it in a very Hadley gamble way, and I think the answer is, if I can be as blunt, yes. I do, and I think on three counts as well. One, of course, taking that oil off the table by saying we were going to have zero exports from the Iranians, which was going to be a hard ask, but if they did do it, then that would, of course, put more pressure on OPEC to put more barrels on the table. Two, giving these massive waivers, these 180-day, 8 waivers as well, has taken the wind out of their sails. And three, of course, the US production levels, which is not a policy from the government, it is basically the individual producers. But I think on all three fronts, they feel that the US is making the headlines and they're having to react. And, of course, as ever with Mr. Trump, when oil prices go down, it's him. When they go up, it's OPEC's fault. That's how he calls it.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.